The banks. Don't you dare destroy our precious banks. So some senators signed a letter to the U.S. regulators discouraging the use of an Operation Choke Point of the crypto industry that the powers that be are allegedly pulling together to stymie crypto. And as with everything in politics, the timing is hilarious. See, the politicians wrote about this iteration of Operation Choke Point yesterday when it seemed like, Silvergate, Signature were the ones that were going to feel the hurt. Well, today it turns out it's not crypto banks that are in trouble. It's banks like Silicon Valley Bank. They're struggling with rising interest rates due to what's called duration mismatches and to famed, totally not evil overlord Peter Thiel's founder fund encouraging a bank run. Before pulling it back all to crypto, I did not know that rising interest rates would cause banks in California to fail. We can talk about that if you want to talk about that. I agree with these four Republican senators. Crypto is not the systemic risk, and if you need any more proof of that, just look at Silicon Valley Bank. We just got news right before the show that the California Department of Financial Protection and Innovation shut down Silicon Valley Bank and then appointed the FDIC as a receiver, and now we have a proper bank failure in 2023. 2023. Insured deposits will be fully accessible by Monday, they say, and then the FDIC is going to try to make uninsured depositors as whole as possible. This is the 18th largest bank, or was the 18th largest bank in the U.S. This is the largest bank failure since the Great Recession. Man, I love entropy. Zach, any takes on this?
Yeah, bank runs are crazy. This is nuts. This is nuts that we're seeing this unfold in real time. I think it's not just Peter Thiel, right? We saw Pantera. We saw a bunch of other VC firms say, hey, portfolio companies, you might want to get your money out of old Silicon Valley Bank, real quick. Well, this was all unfolding Thursday night. So that may have been sort of the death knell, but it's certainly not what I think caused it. At its root, you saw sort of Arthur Hayes tweeting, I think it was yesterday, saying that, Jerome Powell has broken the U.S. banking system, but then I guess arguably by curtailing sort of bond buying, right? So you have sort of these macroeconomic ripples that are unfolding across the banking sector. It's not just crypto in this instance. I think Silvergate was rightly capturing headlines. We saw a little bit of grave dancing from the likes of Elizabeth Warren and other lawmakers who were long wary and skeptical of Silvergate's involvement with crypto. Silicon Valley, that's less of the story here. I think it's more tech startups rather than crypto startups. They certainly served a few crypto startups, but by and large, we're talking about one of the preeminent banks that were serving an emerging class of sort of Web 2 startups in California and beyond. So yeah, pretty wild to see this really unfold, against the backdrop of, what had been some otherwise positive signs in the economy that were announced even earlier this morning. So pretty crazy stuff, but I want to throw it to Sam for his thoughts.
Yeah, I mean, really quick, one thing that I just want to zoom in on here is the fact that this letter that George mentioned came from 4 Republican senators. And that makes sense, obviously, because it's like an anti-regulation sort of an argument that they're making. But it also, I think, is indicative maybe of a theme that we're going to see more and more post-SBF, which is the increased, I guess, polarization or partisanship with regards to the backers of crypto. There was a big push around, the time of SBF's heyday to bring, more democratic, lawmakers onto the side of the, crypto mission. And that largely, I think we're going to see is falling apart in light of that collapse and people feeling like they were, fooled or tricked by SBF. And so I don't know if this is the exact, perfect example of that, because again, it is a typical regulation sort of argument that they're making. But I do think we're going to see more of this, more polarization with regards to who's backing crypto. Jen, maybe over to you.
Yeah, speaking of polarization, I agree with what the senators are saying when it comes to the regulators, squeezing the banks to push crypto into a corner. I don't agree with the comparison they made to Operation Chokehold, which was a move in 2013 by regulators to investigate banks that were catering to legal gun vendors. I don't think that was the right comparison to make. I don't like that they made that comparison. I don't think that it's the same, but I guess the sentiment is there. When it comes to Silicon Valley Bank, there was a report in Bloomberg yesterday where the CEO was asking clients to stay calm as the shares were sinking. There was an emergency call where he asked bank clients, including venture capital investors, to just remain calm because everything is going to be okay. And I don't know about the the rest of you guys, but I'm starting to lose trust in any CEO who says, don't worry, guys, I know you're hearing a lot of things, but just stay calm because everything's going to be okay. Because if we look at the trend the next day, immediately after that statement, everything is not okay. Zach?
Steady lads. It's the steady lads of the TradFi banking world. Steady lads deploying more capital. Anyway, just had to get that in there. George.
Yeah, I mean, yelling is exactly what I was going to say, Jen. If your house is on fire, yelling at everyone saying, oh my God, the house is on fire, don't panic, doesn't do anything. It's very scary. If anything, it makes people think that the house is on fire and it's going to burn down. And that's what happened. I mean, bank runs are so psychological. All of this is so funny. Our financial system is so flimsy. You know, why people come at us saying, oh, why does this have value? Why does crypto have value? And all of a sudden, just 5 rich people saying, hey, this bank is kind of suspect, shutters a bank that has hundreds of billions of dollars of assets. Crazy. Jen, anything to add?
Yeah, so we spoke about this story, well, the Silvergate story on the show for the past couple of days, and we pointed out that Silvergate was a voluntary liquidation. So they chose to go into liquidation. They weren't shut down by the FDIC. They are choosing to close their doors. This is different than that and affects companies outside of the crypto industry. So I just think like the macroeconomic pointers here are serious ones, George, and I would love to hear like your take on that. I feel like this isn't really a crypto story anymore. What can we expect next from a macroeconomic, don't shake your head at me, from a macroeconomic perspective?
Yeah, I'm the macro guy, I guess. I mean, we've been in the zero rate interest environment for such a long time, and a lot of people have talked since the Great Recession, since we've had zero interest rates, that companies that don't deserve to exist, companies that don't make money, are allowed to keep surviving because they can just raise very, very cheap capital. And eventually, when the interest rates went up, these companies are going to start failing, and then people are going to start getting worried. I do think that this is bad. I think that's the macroeconomic outlook from George Kaludis. This is not good. Rising interest rates is not good when all these companies only were able to exist when interest rates were 0 or when interest rates were 0.25, 25 basis points. Yeah. Zach, anything to add on to the macro outlook? Or do you want to go on to the next story?
No. Does Bitcoin fix this? Does being your own bank fix this, George?
Man, Bitcoin is, at this rate, I don't think Bitcoin fixes anything.